LNG market has offered a lot of excitement the last few years and created a lot of expectations, especially after 2011, with the Fukushima disaster driving demand for LNG ships and for LNG in general at new highs, and rates for LNG carriers reaching $150,000 or even $180,000 per day. A sector that was pretty much forgotten even before the financial crisis. It was revived, and between 2011 and 2014, it generated very strong returns. However, the good markets do not last forever. And the last couple of years, the last at least 2015, and even today, is a very challenging time for LNG shipping companies. Rates in the spot market have been around $30,000 when the break-even of these vessels is between $55,000 and $60,000. And a lot of people see the capacity, the overcapacity, which I think Jeff probably will confirm is around 40 ships.
Yep.
It might loom the market for at least 2016, and we have to see how the situation is going to be in 2017. The stocks, however, I don't think, and investors, I don't think that they really follow closely what is happening in the shipping market. That has not prevented the stocks from dropping 60, 70% the last 12 months. And I was running some correlations. We published a detailed report a couple of weeks ago. And I was running correlations between LNG shipping stocks and LNG stocks in general and commodity prices. And I was quite surprised to see that there is an 85% correlation between oil and stocks. So no matter what, I don't know what you're going to tell us today to change this perception, if anything really else really matters except what the price of oil is. It seems that even the price of LNG is not relevant anymore. But some of the key questions that investors are asking is that if there is a market for LNG and there is a huge supply of LNG coming the next few years. I think about 145, 150 million tons. That's a 55% growth of liquefaction capacity that is going to come the next 2-3 years. And I want to start with Jeff. I want to take the opportunity to be a little bit biased because with Jeff we were sitting right across of the same desk for over a year.
Yep, that's right.
When I was at Poten. And Poten is the leading advisor and broker for the LNG industry. And I want to ask you if there is demand for the LNG and if this quantity it can be absorbed.
Thank you, Fotis. Yes, probably more to the 3 to 4 time year frame, but I definitely believe that it can be absorbed. There is significant underutilization in existing regasification capacity, not to mention a lot of new regasification terminals, both offshore and onshore, coming online in the next couple of years that provide tremendous opportunity for growth, or to absorb the new growth. There is, from the niche markets point of view, for example, Southeast Asia or in the Middle East or in the South America, alone can absorb around probably 40 to 50 million tons over the next 5 years. And in addition, you have a lot of underutilization in the existing terminals. So for example, Europe, or even if you don't count US or maybe some of the Japanese overutilization, you still have roughly 550 million tons of regasification capacity. So there, we can probably get into the Europe scenario a little while later, but there definitely is the opportunity there.
Can you be a little bit more specific and for the rest of the panel? I mean, Japan and Korea are the biggest LNG importers.
Correct.
And we saw that last year both these countries, they had lower imports of LNG.
Yes.
China, we know the slowdown in China. Who can absorb this volume, and what needs to happen? Because coal is very cheap. We have the growth of renewables. What kind of price differential do we need to see with other commodities to absorb the 150 million tons of new capacity?
Well, just to kind of go back to that volume discussion that you were bringing up is, yes, you have for 50 to 55% growth, you have around 120 to 140 million tons. So the niche markets, as I said, right there can absorb almost 1/3 to more than 1/3 of that capacity, around 45 million tons. And then you have, as you were saying, you have China, you have new terminals in Taiwan as well. You have somewhat moderate growth in India and as well. So that can absorb around 1/3 of the new volumes coming online as well. We agree Japan is going to probably stay flat for the next couple of foreseeable future at around 85 million tons. Korea probably will be some growth. They say that the capacity coming online is going to nuclear and coal. However, they've also committed to 37% reduction in their CO2s, so it'll be very difficult to achieve that without gas, especially given their utilization. And then, of course, there's also Europe. In Europe in itself, their peak demand, they absorbed around 64 million tons of LNG. That was in 2011. And then by 2014, it was half. So, and they have regasification capacity of around 150 million tons. So there's a lot of room for LNG to go in.
I mean, from what Jeff is telling is emerging countries, new demand in Southeast Asia, that sounds like a perfect environment for FSRUs. And I'm a little bit confused. Who should I ask first? Is it Richard or Simon? Simon, let's start with Simon.
Sure. Yeah,
are you abandoning the shipping business to go to Hoegh's business?
No, we're not abandoning anything. We're just expanding. We see tremendous opportunity in the global gas markets. Gas is cheap, it's clean, it's abundant, it's coming. Coal is dying. People are killing that off around the world with the environmental standards. So we see gas as the fuel of the future. There's a tremendous amount of supply coming on, as you know. We see a shortage of ships in the next few years. There's no doubt there's an oversupply of ships today, but we definitely see a shortage of ships in the next few years. FSRUs, we're stepping into that world. We think it's a very interesting world. It's a very early days in the world. We've hired an experienced guy in the space. We've got a FEED study going at Keppel. We think there's enough room for a few players in that space, quality players. We've established our track record at GasLog in the carrier space. We've been focused on long-term contracts. The spot market's an important part of what we do, but it's not the focus at GasLog. We're focused on long-term fixed-rate contracts, and we see a lot of those still available to us and others. There's a lot of tendering going on. So we're still very excited about gas. We're very excited about the shipping space, and we're very excited about FSRUs, but it'll take us a little bit of time to move into that space. But once we see the right contract and the right kind of return, we will go ahead and execute on that. We see it as a natural progression from the LNG carrier space. So we're still very excited. We see the downturn in the energy space as just setting ourselves up for a very big upturn as we go forward. The capex is being cut, people are reining in, competitors are disappearing. This, we think, sets us up well for the future.
So, Richard, what's going on? Is he trying to steal your market? And how many projects do you think that they are out there? And why a newcomer, another newcomer, is trying to get a piece of the pie? What is going to be your response?
Okay, well, there's a lot of questions there, Fotis. Firstly, we've got the benefit of having our existing fleet of FSRUs, which gives us some visibility on the volume of LNG that's coming through. And as Jefferson said, there's no question that at these prices, the level of utilization is higher. Now, that doesn't make any difference to us from an economic point of view because these assets are all on a daily hire rate. But it is nice to see the customers using them. We've got an asset in Egypt which has been running at close to full utilization since it arrived almost a year ago now. We've got an asset in Lithuania which is providing nearly 100% of Lithuania's gas supply. And that's not just because they want to stick it to the Russians. It's because it's cheap and it is cost effective to import the LNG. And we've got assets in China as well, where the volumes have been higher this year than what we've seen in the past. And in Indonesia, it's picking up too. So I think the demand for LNG is something that is picking up on the ground. Going forward, of course, it's more cost effective, it's more viable as a fuel at these price levels, and that is reflected in the business development side. So we are optimistic on new projects. Weighing on that slightly is that's a relatively slow global economy. So while there might be more projects out there, they may be taking a little bit longer to close. But ultimately, people were saying back when Qatar came online, where's all that LNG going to go? And it all found a home. Yep. And I think that's kind of where we are today. And you obviously hope that Hoegh LNG will be providing a lot of the infrastructure that will be part of the answer to that question. Will others come in? Possibly. It's only a 3 to 4 type vessel a year type market at the moment, so there isn't a whole load of room for other competitors. But with the fundamentals being as strong as they are, it's quite possible that others do come in.
Jeff, I want to ask you, because pricing of LNG will determine both the shipping market and the FSRU market in opposite directions. And perhaps if you can, Simon and Richard, if you can also comment. How do you view the prices of LNG moving forward the next 3 to 5 years? What is going to drive the LNG pricing? So far, we had seen that oil was dominant. The stock seems to indicate that oil is the main factor. I do not know about the Hoegh why is trading together with oil, but that's a question that you might answer later. But do you think that the linkage with oil will hold, and how do you view LNG prices going forward?
Well, there's no question that buyers are trying to break that linkage. I mean, it's absolutely happening. Last year, you saw average contracts of slope around 12.5%. That's down from 14% slope to Brent the year before that. And then you have lower contract volumes. You have smaller contract volumes, shorter in duration, and you also have, just as you said, a breakage to Brent, either by just full-on gas pricing or some sort of hybrid version of that. And there's also no question that prices are going to stay definitely low and below probably the $8 per MMBTU mark for the next couple of years, with the exception of maybe some drastic supply or demand shock. However, that means that a lot of the gas will turn regionalized. So you're probably going to see a drop of the interbasin trade that really needed to happen in the 2010-2011 time period. But that is not necessarily a negative for shipping. And the reason is that because of the shorter duration periods in a lot of the contracts, or the buyers themselves now are seeking out diverse portfolios, so not just going to the same suppliers around, you have an increasing complexity of the market, of the LNG trade market, which in turn will boost up the demand for shipping as well, in our opinion.
Can you elaborate a little bit on that? Because I spoke with some charterers which are sitting on the other side of the fence, and they are talking about exactly the opposite, that perhaps the increased complexity and the role of aggregators might lead to optimization of trading routes and actually shrinkage in distances. What do you think about that? And you mentioned about the spot business. Is there an infrastructure, is there enough infrastructure globally to have a liquid spot market where the pricing of LNG will decouple completely from oil, or we are very far away from that?
There's no question that charters are bearish in the short to medium term, and ship owners are bullish in the medium to long term. Which is definitely creating kind of a wait and see period over the next couple of years to see exactly this question of how new volumes will be absorbed. But back to kind of the original point of the increasing ton-mile demand, it's important to be careful of ton-mile demand because ton-mile demand is just tons over miles. But in shipping, it's more ship days, and it doesn't account for example, delays at ports, or the fact that you have overlapping discharge dates. So as I was saying before, a lot of the SPA volumes, LNG volumes, are getting smaller. So what happens is you have projects, instead of selling 1 million tons or even greater large amounts of volumes to a single buyer, you may just have 500,000 tons. So now where before they could easily optimize the standard LNG vessels are a floating pipeline, one vessel per 1 MTPA, now they might have to discharge vessels maybe within a month's time frame in a completely different discharge ports. So now you need 1.5 to 2, even 2 vessels per MMTPA. So you're seeing that at a much larger scale with a lot of the new volumes that are coming online. So if you take that multiple and you can quickly see how shipping demand may grow, even though you may see trade itself being regionalized.
So Simon, how long do you think that the market, it will take for the market to balance? Is it a 2016 event? Is it 2017 event or going forward? And at what level we're going to see the ships generating their economic return, let's say, I don't know, $70,000, $75,000 that you need to cover your cost of capital?
Well, look, I think the market is balancing itself at the moment. There's no doubt that there's an oversupply of ships in the spot market. What happened was owners ordered ships on spot and they arrived on time. The volumes didn't turn up when they were supposed to turn up. The projects always get delayed. The ships are always on time. And you've seen a lot of sublets, the Angola project, the Gorgon project, subletting their ships into the market. And this causes an oversupply in the short term. But you're starting to see Angola and Gorgon shipping their product, which is going to take ships out of the spot market. You're also seeing increased demand as the capacity comes on, and not all of the volumes are always sold from all of the plants when they come online. So I think you will start to see a tightening in the short-term market, which is going to be good for sentiment. But look, let's remember it's only 10% of the overall shipping market in LNG. And you've seen no new entrants, no speculative capital, nobody ordering for a long time, which again is good for the supply and demand fundamentals in the LNG market. Just on your other question, Fotis, on where do rates go? Well, spot market rates I think will improve, but that's based on that spot market. Long term, the fundamentals are still there. We've seen a lot of tenders that have been in the market recently, and those rates are still very consistent with the rates of return that we've seen in the past and the levels that we've seen in the past. You've not seen any real big divergence away from those rates. It's, as you said earlier in your opening remarks, it's sort of $50,000 to $55,000 a day break even. You pay your OPEX, you pay your interest, and you pay your bank back on your amortization. So we're still seeing rates that are in the 70s, and we signed up a few just recently as last year in the 80s. So I think the people with product are seeing that there will be a shortage of ships, and they need to sign up now to ensure that they don't miss the opportunity to get those ships. And it takes 3 years to build a ship, as you know. So you've got a very good visibility in terms of the supply and demand of shipping going forward. So again, we think the fundamentals are building for a very robust market going forward.
These long-term contracts, do you see them for existing vessels that they are in the water, or because there is this notion about the charterers for the long-term business, they need only new buildings, they need MEGI vessels, they need the LP2S vessels, so that leaves probably the existing vessels on the side and creates a 2 or even 3-tier market.
Well, most of our tenders are for new builds, but they are looking at existing tonnage. Most tenderers today want the latest shiny ship with the best engine, with the lowest boil-off. We're actually looking at ways to enhance the boil-off on some of our existing ships, potentially re-engine some of our ships, And those are projects that we're working on so that we can be the first in the merit order, if you like, in terms of efficiency and effectiveness of our shipping. But it is primarily new builds, but there is some existing tonnage there. But I think, you know, in a rising market, there's so much capacity coming on. I think I read somewhere there's a train coming online every 8 weeks now from now until 2020. That's a lot of product that needs to move. The oil and gas companies have bet big on LNG. We see it as the fuel of the future. We see people increasingly moving to switch out of coal and oil into LNG. And we see a very, very good and bright shipping market going forward.
Richard, I would like if you can also give your view on the debate about the LNG cycle, because Simon talks about one train comes every 8 weeks the next few years. That supports the view of Jeff that prices of LNG will stay low. What are you expecting on LNG pricing, and how prices are impacting your market and the different parts of the cycle? And at what point of the cycle are we investing in each of the sectors? I'm talking about production of LNG, the companies like Cheniere, or to the shipping part of the business, the regasification part of the business, or even the consumers, the utilities. Where we are right now, and at what point would you put money in each of these sectors?
Well, firstly, I'd say that I'm glad that I don't have to worry that much about the LNG carrier space, because I think I'd get a headache. There are a lot of moving parts there, and yeah, Simon, I'm sure, will have analysed them all and have good views on that. You know, fortunately, in the FSRU space, we don't have to worry so much about tanker rates and so on and so forth. But you know, how is this? How is the price of LNG affecting the discussions? It is having an effect. I think there's still, you know, very much a price discovery period going on, and you have, yeah, of course, when you look at the value chain, the cost of the LNG is the biggest component, you know, would-be importers want to figure that side out before they, you know, move on to the infrastructure very often. You've got the bigger resource holders, of course, wanting to hold out for longer-term contracts at, I don't know what, $8, $10 per MMBTU. You've got the spot market at $5, and that delta makes it difficult to for the customers to agree contracts. I think now they're getting very comfortable that the spot market is going to be there for a while, so they aren't as concerned about entering into long-term contracts as they were. However, for you know, relatively conservative utility companies, and that's what most of these companies are, of course, that's a bit of a leap. So, you know, at the end of the day, it's the pent-up demand is building. There's just a sort of, you know, as there always is in the LNG business, sometimes a little bit of a mismatch between the timing of various parts of the chain coming on stream.
And Jeff, would you like to add to that? Where do you see most of the money flowing right now? You are advising a wide range of companies across all the parts of the supply chain. Do you see additional FIDs taking place right now with the prices so low? Do you see more money in FSRUs? Which are going to be the profitable sectors in the next couple of years?
Yeah, especially in the short term, definitely money seems to be flowing down to the buy side of the equation, or flowing downstream. There's definitely questions on how to access new markets, to which they have the conversations with, you know, both Richard and Simon. FIDs in the next couple of years, they're still planning on going ahead. If you take, you know, even the base case scenarios, where we're talking about 50% growth, but post, you know, given the length of time that it takes to do these projects, post the 2022 period, there still is possible need for natural gas.
So do you think that Mozambique or Lake Charles will take FID, and or are going to have only projects which are marginal projects, smaller in size, like Golar's FLNG, for example. And if you can comment on that, how do you think the floating model that either Golar or the Coral project is developing can alter the liquefaction process?
Well, admittedly, I am definitely biased towards the floating side of the equation in LNG, but it's hard to see that there isn't room for that going forward, especially as we slowly turn into a gas economy over the next couple of years. We have aggressive CO2 requirements that we need to meet, and the only way to really do that is to shift away from coal and into gas.
I just add on Lake Charles and Mozambique, I think they will go forward. Lake Charles is one of the cheapest, cost-effective LNG plants. We're not putting it in our forecast. We're not banking on it. We don't need that for this industry to work well and to be a shortage of ships. However, we still believe that those will go forward as the world increasingly, as Jefferson suggests, moves towards gas.
And Richard, can you also comment on the FLNG? You just decided to exit this segment. Jeff is talking about that there is still room. Why did you abandon this effort?
We just find the FSRU space more attractive, and that might be a reflection of where we thought we were in FLNG. I don't know, but if you look at LNG, it is a bit challenged in an oversupplied market. I think the key that you have to look at is what are the differentiating factors of your project, and it might be that it's based on the west coast of the US, for example. Take out the Panama Canal from the equation. That might give you an advantage. It might be in the case of Golar, where they've got associated gas or stranded gas, so they pay next to nothing for it, and it's relatively close to Europe. That might be the advantage. You've got to find projects which have got real differentiating factors that can allow them to compete against people like Cheniere, who I assume can add capacity at very limited cost.
So talking about differentiating factors, and Simon, and you can all comment, what is the differentiating factors of all your companies? I understand that Richard's company is focusing on FSRUs, but now GasLog wants to do FSRUs, Golar is doing FSRUs, Accelerate. Why do we have so many shipping, LNG shipping companies and that nobody can really trade?
Well, I think you're getting less and less, actually. I think the ones that are committed will stay the course. I think you're seeing a sort of shakeout in LNG shipping. I mean, what differentiates us, we've been in the business since 2001. Our safety record is second to none. Our financial base, I think, is very strong. Our customer base is good. Our ability to add and innovate is very good. And we've been very transparent as well. I think that has a value. We have two publicly traded companies, and the transparency is very high. People, investors, customers, clients can see what we're doing. It's very obvious what we're trying to do, and we're taking a slow, methodical and conservative approach to it. We're not adding risk where we don't see the commensurate reward. We're adding long-term fixed-rate contracts, and that's in the LNG carrier space, and also, hopefully, in the FSRU space. That's where we see we can add the most value. Our track record and our reputation, we think, is good. I think access to capital is another key advantage. You've seen a lot of the public markets closing down in debt and equity. There's been a huge pause in investment, but we're still seeing a very big appetite from our banks, a very big appetite from private money to come in and to assist us with the growth plans that we've got. But we want to do them sensibly and conservatively. We want to do them when it's a fixed long-term contract and it's funded. And it's obvious how that's all going to fit together. So, and the backdrop, of course, is an ever-increasing gas market, growing gas market, which is the fundamentals that make this industry so exciting.
One last question, and I want to give the opportunity to the audience. And capital is more scarce right now. The MLP model seems that it has gone out of the window. how will these companies, all your companies, will finance their growth without this great MLP multiples? And what prevents you, Richard, from sitting down with Simon and his team and say, we are going to do the FSRUs under our umbrella, you are going to do the shipping companies. What prevents consolidation in this sector?
The first question you asked was the question of the MLPs and are they still applicable? And we very much think they are. And I think it is important that you have the right kind of assets within them. FSRUs are, I think, especially well suited given the length of their contracts. Our current trading yield is now back below 10%. The growth expectations are much less than what they were 2 years ago. So, arguably the cost of equity has not actually changed that much. And we're still a firm believer in the structure that we have, and that's a structure where we can tap the MLP market, which is where the assets which are on contract sit, so people can benefit from the distributions on the one hand, and then also tap the Norwegian market, which is where the Hoegh LNG parent company is listed on the other.
So I realize that we have gone over our time limit and we do not have notes for unexpected questions to answer to you. So I think that with this, if you have any questions, you can speak directly to our audience, to our panel, and I want to thank all of you for being here and sharing your thoughts. Thank you.
Capital Link is great at bringing investors in the shipping industry and shipping industry participants together for discussions around whatever segments are particular of interest at the time. I'd just like to discuss the aspects of the LNG shipping industry and what the outlook is going to be like for the next couple of years.